Welcome to the end of day review for Wednesday, the 6th of March 2024. Starting off with the economic calendar, we had a whole bunch of red folder news for the New York session. The annual budget release was released tentatively, and we didn't really know what time it would be released and the impact thereof. Since this release is annually, there isn't really much of an impact, and I believe that majority of what is in this budget release is probably already priced into the market. Then, from a New York session perspective, we had Fed Chair Powell testifying at 5 p.m. And the problem with this is, if you take a New York trade, you usually don't have enough time to get yourself out of the trade within a meaningful time, and thus I concluded that I won't be trading any based on any New York-based trades. However, if I was in a London trade, then I'll manage it accordingly to these news releases, and thereafter, I'll close the trade just before Powell testifies. In terms of the chart, starting off with the daily, we understand that there was three consecutive bullish candles yesterday. And it looks like today is going to be a fourth consecutive bullish candle. However, what it essentially meant for today is that our daily bias was only to short, and from a 4H market structure, that sort of fell in line with our higher time frame narrative because we have a bearish market structure. In terms of 4H order flow, we do have reasons to trade both long and short because the pullback phase was extended, and now that we're reaching deeper into the pro-trend extreme, there is reason for both longs and shorts. However, in order to trade counter trend, because we essentially trading against a pro trend extreme barrier, we need pullback phase last point of supply support for any counter trend trade ideas to trade further into the pro trend extreme. However, what you can see is that we didn't actually tap into this pullback phase last point of supply to support any counter trend trades, and thus it only made sense to short from a narrative perspective, and that together with the daily candle bias, it only made sense to short. So from that perspective, moving into the Frankfurt session, we were essentially looking for the Frankfurt session to potentially validate a Frankfurt high of the day by London breaking the Frankfurt low, but that didn't materialize. And then because London created a high of the day in terms of current day trading, based on current day ideas, I require London's high of the day to be validated by New York or some sort of news, and that wasn't going to happen until New York. So in terms of current day based ideas, I was pretty much not looking for ways to get in subsequent to the London high of the day. However, what we did have is we had the previous high of the day being created. We then had this leg being validated, um, and the reason why it was validated is because it actually changed character right here. Then we had the daily bias to support why it made sense to anchor the previous high of the day to the extreme. We then set our order such that 70% of the daily range will achieve approximately 3 hours, so close enough. And then you can see we reacted for a while within this area. We then pushed out, and then we had the New York news release being the ADP non-farm employment change, which was negative. And because it was negative, it only supports longs of GBPUSD, and thus I exited the trade for a break even. Um, just just in case I couldn't actually get out of the trade. So I wasn't able to cover commissions in this case because there was a chance that price would just push up, but you can see it actually lingered around for a while, but we wouldn't know that in the live market. So I closed it out for break even, paid the commissions, which is fine. And then what you can see is in line with the news, we actually continued to push higher as anticipated. So all in all, that's pretty much the end of day review. I took one trade with one break even result, and that's pretty much it. We'll chat again tomorrow for the London outlook.